has been gold and silver's gain, as you know, those metals continuing to defy gravity. Crude also closing in on record levels. Will this rally continue? Peter Schiff is the CEO of Euro Pacific Capital, the author of How an Economy Grows and Why It Crashes. He can be a little shy, sarcasm here, about his opinion, so we're going to try to pull him out of his shell. Peter, it's always nice to see you.
Nice to be here again.
All right, I asked you this the last time you were on the show, Peter. I know that you're bullish gold, you're bullish silver. Give us a time frame in the forecast here.
Well, I mean, maybe if Ben Bernanke gets sick or something and stops talking, maybe the metals will take a breather. But as long as he's out there scaring everybody, saying there's no inflation, you know, it reminds me of E.F. Hutton. You know, when Ben Bernanke talks, the gold traders listen, and it's music to their ears if they're a bull. And they're just going to keep on buying. And, you know, the dollar index hitting a new, I think, about 3-year low. Imagine where the dollar index would be today if the Deutschmark were there instead of the euro.
Peter, let me ask you this, though. Let's say the emerging markets get a little more serious, start raising rates to deal with that inflation. Would that change your outlook for gold at all?
No, not at all. I mean, first of all, I don't see any of these foreign central banks getting aggressive enough to damage gold. But as foreign central banks raise rates, that is going to make their currencies far more appealing than the dollar. And so that'll accelerate the downward pressure on the dollar, which, of course, is good for gold, particularly from the perspective of a U.S. dollar investor.
So what would be the risk to your view? We know your view, but what would make you change your mind? What's something you'd be looking at?
Short of Ben Bernanke's stopping talking, et cetera, et cetera.
Well, look,
duct tape.
There can always be a correction in a bull market. I mean, so you can have a correction at any time. But the only thing that would really make me change my mind would be, you know, fiscal responsibility in Washington and sound money at the Fed. But neither of those things is a reality. The only thing that can hurt gold is not going to happen because the politicians don't have the guts to prick this phony bubble economy. So they're going to keep blowing air into it in the form of cheap money and low rates. And that means gold's going to go up, silver's going to go up, commodities are going to go up, everything is going to go up. Stocks will go up too, but they won't go up as fast.
All right, Peter, we're going to leave it there. Thanks so much for your time. Peter Schiff of Euro Pacific Capital. And, of course, we're talking gold and silver. We got to get the technical levels on these metals. So we go to Todd Gordon, who is standing by, as usual, at the Money Map. Hey, Todd.
Hey, guys. You know, I agree with what Peter's saying. As far as an upward forecast of 5,000, I'm not so sure. But taking it down to a trading time frame, I think it's important to look at the gold market, but also look at silver. For a currency trader's perspective, it's important to watch the interaction between the two. And there's something that's interesting that's going on here. Take a look at the gold in the white bars in the background. We had a move in the last 2 hours in New York trading today. Gold went parabolic. So right now, the path of least resistance for gold is higher. But what's interesting is look at silver in teal. Silver is not confirming what the gold market is telling us. So gold is pushing higher. Silver's not confirming. That tells me that the markets are not as encouraged from a risk-on perspective. Typically, in a higher stock market, higher risk-on perspective, you want to see silver outperforming gold. The opposite's happening. So as that pertains to the U.S. dollar, we're not so sure. But just be careful from a risk-on perspective. That's very telling.
All right, so if you're concerned about the risk-on aspect of the trade, Rebecca, that may be the perfect reason why you might want to use currencies as opposed to the commodities themselves to actually play this.
No, absolutely. One nice thing about commodity currencies is